Let's talk cryptocurrency.
You're watching Personal Finance with Coach Kelvin. Let's get into the video.
Hey guys, Coach Kelvin here. And today I want to talk to you about potential alternative asset classes you can have in your portfolio. Cryptocurrency being all the hype right now. Is it something you should have in your portfolio? Do we need to have it in your portfolio? And where I believe that this sort of technology will take us in the future. So, just a little disclaimer, I do actually own a little bit of cryptocurrency, but I keep this down to a very small percentage of my portfolio, mainly due to the fact that it doesn't produce any cash flow. And right now, that's where the way I am focusing my investment strategy. I'm looking for shares which pay dividends that I can reinvest and grow my wealth this way. Now, cryptocurrency has many different behaviors depending on the asset that you are buying. So we have many different coins out there, thousands and thousands of coins, and a lot of them have very different functions. Now, if you're looking at Bitcoin, this was created in 2009, and this was one of the stepping stones for developing this blockchain technology and creating a digital store of wealth. Now, Bitcoin behaves a lot like gold does, okay? It's extremely clunky and it's difficult to transact with. It's difficult to store, and just like gold, it really increases in price based on supply and demand. Now, Bitcoin, we have seen in the last decade, it has been the top performing asset class, going from just a fraction of a dollar back in 2009 to now being worth, as of right now, $80,000 in Australian dollars. That is absurd. Now, when we look at basically the way that this cryptocurrency or Bitcoin acts, it is more of an asset or a property than it is a currency. The way people buy it is to hold and not actually to transact with. And whilst a lot of businesses are starting to now purchase Bitcoin, for example, Tesla in February bought $1.5 billion worth of Bitcoin. Whilst a lot of businesses and individual investors are looking to purchase this asset class, very little transactions happen with it. It is used as more of a hedge against inflation, because if we keep our money in cash and inflation is at a rate of 1 to 2% every single year, then we're losing 1 to 2% of the purchasing power of that cash. Now, Bitcoin, which is going up with inflation, okay, this is essentially preserving the value of our dollars. In fact, it's growing a sort of exponentially, and it's a very absurd rate. Now, if we look at the way that Bitcoin behaves, it's almost because there is more money in circulation due to the government's printing money and due to inflation that the price is being pushed so high. So in 2020, around about a third of all the money ever printed in the United States came into circulation as stimulus packages to help with the pandemic and all the shutdowns that occurred. Now, all of this money has been given to people in the form of stimulus checks, which they've been then able to do with it as they please. Now, this has allowed a lot of liquid cash for people to begin their first investments, and that means, yes, a lot of speculation is occurring. Now, people have been able to access a lot of cryptocurrencies through different platforms in the United States and here in Australia. And these different asset classes, especially with the crypto space, can move a lot just on market hype and social media. So we've seen the vast results, how Bitcoin, how Dogecoin, and how they can all grow exponentially just from a single tweet from Elon Musk. And whilst he is the meme lord of the entire world right now, we shouldn't be making investment decisions based on how he's tweeting, because when everyone sees this and they pile their money in, we're purchasing at an inflated price, okay? So we want to be making investments where we're getting a margin of safety price, which means if we do an evaluation on our asset, we make a purchase and we're slightly wrong in our calculation, there's still a margin of safety is as to where this could still be a slightly safer investment compared to just gambling, okay? Now, when people are looking to buy and sell cryptocurrencies, this is treated by the government for tax purposes as property or as an asset and not a currency at all. If you were to buy $100 of Bitcoin and it doubles into $200, and then you were to sell it or you were to trade it or transact with it, you would then have to pay capital gains tax on the $100 portion which you have made in profit. Now that would be taxed at your income tax rate. So if you were paying, 25 cents on the dollar, that's how much tax you'd have to pay on that $100 capital gain. Okay. Now, obviously, in the United States and in Australia, we get a discount for holding an asset for longer than 12 months before we make a sale when we pay capital gains tax. So long-term holds are going to be far more tax efficient. However, with how volatile the crypto market is, it's extremely hard for a lot of people to sit on their hands and just not sell. Now, we've seen as of today, a lot of hype in the market around Dogecoin. So I remember back in February this year where we hit all-time highs at 11 cents. And this is in Australian dollars, just for those watching from the United States. Now, as of right now today, it has actually gotten up to 60 cents in Australian dollars, which is just absurd. That is a six-fold increase. And at the time that it hit an all-time high of 11 cents, this was a 1,500% increase at the time from 0.02 cents, okay? So we have just seen so much volatility around Dogecoin in the markets, and this is getting people excited. And as that price is increasing, more people are piling their money in. Now, if you want to have some cryptocurrency within your portfolio, that is completely fine. But the way I like to look at it is it's such a volatile asset that does not produce cash flow, and therefore it's extremely hard to know what the value of a cryptocurrency is when you make a purchase. If you can look at a cryptocurrency though as what the function is of that currency or that asset, and you can decide, does this have the potential to return value to me later on, then it may actually become a far better investment than just dumping money on the latest shitcoin that's trending on Twitter. Okay? So for example, here in Western Australia, we have a company called Power Ledger, and they're essentially trying to create a system, or have created a coin, where upon earning renewable energies through your solar panels, etc., you can then transact and trade your renewable energy through the exchange through a cryptocurrency called Power Ledger. Now the coin, POWR, is very useful because in the future, as more and more people start adopting green energy pathways, this method of transacting is going to allow us to trade our energy peer-to-peer instead of putting it back into the grid to the government. So when we look at the function of that cryptocurrency, that has some very exciting future uses, and I can see that becoming very valuable. And as a little disclaimer, yes, I do own a tiny bit, but I'm not just going to dump money on any coin for the sake of doing it, because what I'm not planning to do with any of my disposable funds that I could invest is to gamble. All right, so when looking at cryptocurrency or crypto assets as a piece of your portfolio, it's important to determine how much of a percentage you wish to have. And then what I would do, and what I do, is dollar cost average a particular amount every single week and have an automatic transaction. So I don't sit there and try and time the market. And you can go back to my dollar cost averaging video, which I explained about shares, but I do this with cryptocurrency just on a much smaller scale. Okay, so $50 a week I have transfer into my account, and then that makes an automatic purchase where $24 goes onto Ethereum, $24 goes onto Bitcoin, and then that gives me $2 that I can put onto another coin, which I feel like can add value to me. So I've, with this $2 transaction, purchased Power Ledger and Dogecoin in the past. Now, why all of these currencies may be a good investment for you is because they can grow extremely fast. But on the other side of that coin, you can lose your money just as fast. So if you had a goal of 2% of your portfolio, for example, to be cryptocurrency, or 5% or 10% or whatever it is, when you meet that through your dollar cost averaging, it's now time to stop adding money to the market, okay? What I would suggest then is, if the market keeps going up, so does the value of that cryptocurrency within your portfolio. So you no longer need to touch it at all, okay? However, if there's a dip and the value of that crypto crashes and it becomes a lesser portion of your portfolio, start dollar cost averaging in again. And what you're going to be doing is having a low buy-in average, because you're not always putting money in at those all-time highs. When you reach your selected or your desired portfolio allocation, start putting your funds into those perhaps less volatile and more predictable asset classes like shares, which is my personal favorite and how I wish to reach fire by investing in. Perhaps you're going to pay down your property, or if you have any debts, you should absolutely focus on paying those down, because any high interest debts such as credit cards, personal loans, and car loans, you're going to get a fantastic return by paying those debts off when you're already paying an interest rate of 10 or perhaps even more of a percentage, especially on credit cards. You know, some of those go up to 21%, 18%, etc. So if we pay down those debts, that's going to still be a great return on investment. But if we just dump money on any kind of crypto asset or crypto coin that is trending on Twitter, or our friend has told us about, or it's going off on Instagram, if we just dump money in blindly and we don't understand the underlying functionality of that coin, it's highly likely we will lose money, because you're essentially just throwing a dart in the dark, hoping to hit that bullseye. And whilst you may see a nice gain and it may go up 30% in a day, it's just as likely to go the other way. So guys, here's something I want you to think about. If your investment were to go down by 50%, okay, so let's say you put $100 into any asset class and it goes down by 50%, you know you do not need to earn 50% to recover that. You then need to earn 100% to double your money, okay? So it is twice as hard to recover a loss through a gain after you have lost money, okay? So anytime you make a speculative investment, make sure it's a small amount. It's a money value or a percentage that you are willing to risk, and you're not going to be financially ruined or crippled by actually making that call. If you used margin or any sort of finance to go ahead and put money onto a cryptocurrency, this would be extremely risky, because you're paying interest on such a volatile asset that has extremely high highs and extremely low lows, okay? So what I would suggest is steer well away from any high risk credit lines, credit cards, etc. If you are looking to put any sort of money into the crypto market, dollar cost average a very small amount and understand when your target allocation is met to take the foot off the accelerator with this strategy and to put your money into other assets as well. So we stay broadly diversified. We have crypto as a store of wealth, not as a currency yet, because it's not really widely accepted and it's very volatile in price. So it's a store of wealth and a hedge against inflation. And your crypto is also going to be that sort of small percentage investment of your portfolio that could give you really high gains and return some good capital to you. But do not think that it is an easy ride to wealth, because if you do not understand what you're doing and you buy in at all-time highs when everyone is buying in, you're going to get burned. There's a fantastic quote from legendary investor Warren Buffett, and he says, "Be fearful when others are greedy, and be greedy when others are fearful." So if you see the market start to go red and all the cryptocurrencies start to crash and the value or the percentage you hold in your portfolio dwindles, that's the time to buy. Not when it is skyrocketing and you can no longer afford it at a reasonable price with a margin of safety based on what you believe the value is. All right, guys, so I personally only put 1 to 2% of my portfolio into cryptocurrency, and I don't do this for any reason other than I believe that it is a good store of wealth and a hedge against inflation right now. I don't wish to use it as a means to transact, and I don't wish to sell at all. So at the moment, I just put my $50 in a week and let it sit there, and I see what happens. It was nice to see that Elon Musk pushed the price up of that Dogecoin today, but it could be back at the bottom tomorrow, and I don't intend to sell and put myself at risk of paying those capital gains just yet. All right, guys, so there's my 2 cents on cryptocurrencies, and ironically, 2 cents could probably get you a few of them. All right, guys, if you got any value from this video, please like, share, and subscribe, and leave a comment if you wish to add your piece. I look forward to seeing you in the next video.